Everybody, welcome to the morning market briefing. It's Wednesday, March 9th, 2022. Hope you're doing well. Opening on a different tone today. Little surprise topic for you guys. We're going to open up with the sports report. Ben, we got lots going on. Tom, we've been talking maybe less about baseball, more about football trades. But the MLB, they're trying to figure out this labor situation with the Major League Baseball Players Association. They had a really, really long meeting yesterday, lasted 17 hours. Reports are that this could be a positive step towards reducing excess games lost for the baseball season. As a casual baseball fan, I think it was pretty cool that they met for 17 hours rather than playing 5 or 6 innings of baseball during that time period. But Ben, are we going to get baseball this year? And I feel like you care about this more than Tom and I, given the location of your home.
I don't know. We're trying to feel optimistic today. We got the market up. We'll talk a little bit about that. And then we got this MLB negotiation that's going down. And I just heard our 2 most resident experts on baseball walk in talking about the negotiations, which I think is a step in the right direction. So I'm optimistic on it. So I'm going to make the call before they do because they know more about it than I do.
He thinks it's going to happen. Yeah, Sam Frost and Jason Sieb, 2 analysts here, both said that they would play for free. So, there is that option. Tom, baseball hasn't moved the needle for you?
Not since the last strike in 93, 94. That was the death of my baseball card collecting career until mid-pandemic when cards got hot again. But up until that point, I was a big baseball fan, big collector of cards. And then obviously when I learned it was all about the money at the ripe old age of 8, it just wasn't for me anymore.
There we go. Other big sports story, Ben, your beloved Seattle Seahawks. They made a trade. They traded Russell Wilson. They're getting Drew Lock and Noah Fant and other relatively unnoteworthy players back from the Denver Broncos. They're getting a first-round pick. I think it's pick number 9 in the upcoming NFL draft. They'll get a first-round pick next year. I think they have the 40th pick in the second round this year. A couple other second-round picks down the pipe. Big story. Sent shockwaves. How do you feel, if you're being honest with yourself, about the trade?
I feel good about it. I think that they were starting to become a little bit of a house of cards anyway, with Wilson just saving the day on too many occasions. They needed a rebuild, and this is a way to accelerate the rebuild. So I think that's good. I also think they'll probably be better than people expect. I mean, I don't know what the over-under right now is for wins, but I'm sure it's gone down dramatically. But if it's anything less than 4, I'm taking the over for sure on the Seahawks. I think they'll figure it out. And remember, when Russell Wilson came in, he threw like 20 passes a game back in 2012. It wasn't the Russell Wilson that we knew. They had great defense, a really good running back, and they have tons of cap room right now and get some good draft picks and some good draft capital because they're going to trade back from that 9th pick, in my opinion. So I think it's a good move, and I think it's a great deal for the Seahawks.
All right, Ben's optimistic. Tom, I felt like they didn't get enough draft picks. I don't know. I could take or leave Drew Lock. I guess you need a quarterback, and not everyone has as much faith in Jacob Eason, the backup in Seattle, as I do. But I think I would have wanted more picks. What are your thoughts, Tom?
I think, we should ship Matt Ryan out there and we'll get Eason back, bring him home, excite the fan base because we're not going to win any games this year, but make sure that all the Georgia fans come back. I can't remember though. Jacob Eason had a big pass in a game against Tennessee a couple of years ago. I can't remember how that game ended. I don't know if anybody wants to jump in the chat with how that game ended, but it was a big one as I recall.
I barely remember it. I remember he completed that long bomb and left the field with a few seconds left leading, which was pretty impressive from a freshman. There's lots going on. We also didn't talk about the Calvin Ridley gambling story. He bet $1,500 and he got suspended for a year by the NFL. Just kind of a brutal, very bad bet, as that cost him $11 million in salary. So not a great risk reward profile on those parlay bets that Ridley did. So lots going on. There's stuff happening. So just kind of a casual reminder, there's things happening other than just in the Ukraine. So I think that's important to note. On that note, futures are up a lot. We got Dow futures up 163 basis points, S&P futures up 181, NASDAQ futures up 230. I have not looked in the last hour or so, but early in the day, European stocks were up a lot. The DAX was up a lot. Things just kind of across the board in Europe were looking quite favorable in the 3 to 4% gain territory. Ben, what has shifted, in your opinion, over the last 24 hours that might be giving the market some relief?
I think there are a few things, but then I'll talk about what I think the real reason is. First is you got Biden's ban on Russian oil. So that's kind of the sell on the rumor, buy on the news. Once it actually comes out, maybe it's not quite as significant as people thought, especially considering a lot of companies that already stopped moving oil and stopped buying Russian oil. Zelensky said that he's no longer insisting on NATO membership. That was a story that came out around noon yesterday, but he actually said it in an ABC interview the night before, and that's where the news article was cited. So, I really think that those are fairly thin. And then if you look at this morning, you're continuing to see some shelling. You do have a ceasefire for evacuation corridors that are allegedly open for now. But there's still this lack of knowledge of anything going on at the Chernobyl nuclear plant. The Kremlin says that the U.S. has declared economic war on Russia. The U.S. is making Russia think carefully about the situation, but from the Kremlin, we are, and will be a reliable energy supplier, going to continue Ukraine talks. And they're going to give a list of goods subject to import and export bans shortly, and that's Russia. Putin yesterday came out with a decree saying that they're going to have some import and export bans on certain products from Russia. So, and then Ukraine, from their perspective, they said that the last 2 weeks have shown that we will not surrender, that foreign parties will be held responsible for humanitarian catastrophe if they don't implement a no-fly zone, and that the threat level is at a maximum. So, these are the same headlines that we've been seeing for the last few days. And ultimately, I don't think that this is playing a significant role in the market rally. And you may say, Ben, you're being dumb. But I really think that at the end of the day, the sell-off was technically overdone in the short term. We're potentially reaching the end of what is feasible in terms of economic sanctions. We're already seeing NATO splinter on things. Germany was supposed to implement the SWIFT ban on Russia's Sberbank, and Germany's still pushing back. They're not implementing the SWIFT ban. No one joined the US except the UK in terms of implementing a ban on Russian oil. So we're seeing the limits of what economic sanctions can do and what economic sanctions are feasible that the West can even put on Russia. On top of that, you had technical indicators that suggested the sell-off had been excessive. You had a little bit of a blow off top in oil. Oil's coming back by about 3 or 4% this morning. But interestingly, that's more on the near-term contract and less on the out contracts. And then you had the relative strength index on the euro that was under 25, which indicates a very oversold level. So the bottom line is, I think that you can point to any number of news stories and cherry pick the one that you think justifies the 2% move. But we've had these news stories for the last week. And the market hasn't been up 2% every day, obviously. So I think the sell-off was just pretty much overdone. The good news, though, is, and I don't know if we're out of the woods yet. I think that's the big caveat on that. So we're going to remain disciplined. Having said that, I would note that markets often do bottom before the economy really bottoms. So if you look at the previous bottoms, the market bottomed during COVID on March 23rd. That was before anyone at Narwhal went to work from home. The market bottomed on March 6, 2009, when the unemployment rate was 8.3%. The unemployment rate continued to go up for the next 7 months until October, when it hit 10%, and didn't actually go below 8.3% until 2012. So for 3 years after that, the unemployment rate remained higher than when the market bottomed. So the market's going to price in these things earlier. Again, I don't know if this suggests we're at the bottom yet. I suspect it probably doesn't, but we're going to continue to remain disciplined and keep those allocations tight. And that's what allows us to buy low and sell high. So we'll trim a little bit today in aggregate, buy a little bit on weakness. And that's just kind of how we operate.
Yeah, I think the big key for us tactically is just staying tight. I mean, we talked about this. We have our investment committee meetings, the formal ones on Tuesday and Friday, and that was a big talking point yesterday as we're sitting there. We had a very, very choppy day yesterday. I mean, the market was just kind of all over the place. Tom, what are we seeing in fixed income world?
Pain. We've basically seen very, very aggressive selling overnight, really across the curve. The 2-year treasury is now all the way up to a 164. I think a lot of the selling is anticipation of a really bad CPI print tomorrow. We get that at 8:30, so we'll get it live on the call. Right now, the expectation is 7.8% year over year, with that being 6.4% ex food and energy. I think that's going to be higher personally, but I think that's probably going to be the peak if I had to guess. I think, writing it in pencil, not in pen, I think peak inflation number is going to be the one we get tomorrow. Just as a function of how the economy is going, I think COVID is basically gone, done and dusted in terms of lockdowns and things of that nature. So I think the supply chain opens up. I think the rise in energy sucks demand out of the market and pushes all of it into energy, which should move the needle up for CPI, but it's going to pull everything else down as well. So I think we're probably going to hit peak inflation, but I think that the anxiety around that is really hurting bonds today. We're just seeing selling right across the curve. It is wild because it's ultra flat. I mean, the 3-year treasury is at 180, the 5-year treasury is at 183, and the 7 years at 188, and 10 years at 190. So it's like you basically get zero incremental value for going out on the curve after you get out to about 3 years, which is a very unusual shape. And of course, we're still inverted on the 20 and 30 year. You can make more money on a 20-year bond than you can on a 30-year bond, which is a little counterintuitive. So we're just all over the map here. Very unusual structure on the yield curve. But my hope is that we get the number, the market digests it, we get probably a rate hike on the 14th, and then we keep on trucking and we see a little bit of normalization after.
Good deal. Ben, kind of a wild topic. We talked about this yesterday afternoon as well. Biden is announcing an executive order with crypto oversight. It essentially is reading like what's coming out is just a big research project. He wants to identify risks, wants to see where we're positioned. I think you and I might be on a different page here in terms of what we think potential outcomes could be. To me, this feels a lot like the first quarter of a game in which we're going to move towards more consistent regulation and even taxation on cryptocurrencies. They are technically something that you should be reporting. There's just not mechanisms in place to which people are really forced to do so. I think that's likely in the cards, though the Bitcoin response to the executive order has been quite strong, and it seems the market is kind of taking this as an endorsement of crypto. What's your read, Ben?
Yeah, I think it's a big research project. I just think that with these executive orders that have been signed in the last year or so, I just don't think that they've ultimately been fairly toothless. And again, all they're doing is taking advantage of the benefits of digital assets while also addressing the risks. That's the project that he's given to agencies. He said, give me something in 6 months, and then we can assess the risks and also assess the benefits, because they're also looking at doing a digital US dollar in a way to combat illicit finance. So he's almost looking to embrace it at the same time he's looking at the risks. So I don't think that there's a huge read for it in the near term. And I think for Bitcoin in the near term, that was perceived as a positive because a lot of people were concerned about what would be in this executive order. We're not seeing any of those concerns addressed in the executive order itself. It's more, hey, let's take a look at this.
Good deal. Last thing, we did have an Apple event yesterday. They announced a new Mac that's a little bit on the higher end on the performance scale, iPad Air, and a cheaper iPhone SE. Also some more content coming to Apple TV, including some Major League Baseball games on Friday, assuming they actually have baseball games. Ben, any big takeaways from the Apple event? I mean, kind of under the radar.
Yeah, it's kind of under the radar. I think the big thing is you can now get a 5G iPhone for $430. So this is going to have a lot of content. This is going to have a lot of 5G content. So it's really good for the chip manufacturers. And it's $429, which is half the price of a full iPhone 13. So I think that's a big story. I think we kind of knew this was coming. The price point, I do think, is fairly accessible for a lot of people and could reinvigorate the 5G push.
Good deal. We're going to wrap it up there. Big call tomorrow. We'll get the CPI print. Hope you guys have a great day. Hope the market stays up. We'll see what happens, and we'll report back in about 24 hours.